Did you know that self-employed individuals are also entitled to sick leave and paid family leave? Stick around, don't go anywhere, and we'll tell you all about it. Hello folks, it's Carmen Huertas again from Freedomtax Accounting. We are a full-service accounting firm providing full-service accounting needs and services to our community for over 20 years. And we're here today for a quick little video to tell you about paid sick leave and family leave, but for self-employed individuals. Self-employed people are getting quite a few opportunities to get some assistance, which is really refreshing. Not only could you get the PPP loan, you can also claim the paid sick leave and family leave, which is really almost bizarre to think because you are your own boss. Nobody's paying you. So who's going to pay you the paid sick leave and the paid family leave? Well, in this video, we're going to tell you how that works. This is nothing new. This has been around since last year. It came out in the Families First Coronavirus Relief Act, and it's available from April 1st, 2020. It used to end December 31st, 2020, but in the Appropriations Act that was signed off on in December, it extended that through March 31st of this year. So I'm sure you've seen a ton of other videos. If you're looking up this topic, I'm sure, well, maybe this is your first stop, but there are other videos that discuss what the paid sick leave amounts, what is the threshold for both instances, if it's sick leave or if it's family leave. And let me just recap real quickly by stating that if the person, right, the worker, let's look at it first from the employer standpoint. If you are an employee at a job and you are the one that got sick with COVID, you have a positive diagnosis, or you have the symptoms and you're seeking medical care and you're seeking the positive test or the test result, then you are obviously needing to stay home. That's the guidance that we've heard over and over again is if you have the symptoms, stay home. Well, you can't work generally if you're at home. If you are at home and you can't telework, then you are still entitled to get paid for that time. If the employer has less than 500 employees, they are required to pay sick leave and pay family leave. So how much is that? Sick leave, if the individual, the employee, is the one that is sick or experiencing the symptoms, there is a max that you have to pay of $511 a day for 2 weeks or 80 hours, the equivalent of 2 work weeks. Okay, so if somebody gets paid $800 a day, then you're only entitled to $511 of that. If you get paid $200 a day, then that's all you get, $200, because it's up to $511 max per day for 2 weeks. So the maximum that you can get, that the employer can get for you, right? Because they're the ones paying you, so they get the credit back on those wages. The maximum is $5,110. Now, if you are the self-employed individual, the same rule applies. The amounts do not change. What changes is how do you go about calculating that and how do you get it, all right? If it's the family leave situation, that is where the employee is not the one that is sick, but they had to stay home because of all the school shutdowns, summer camp is closed, they don't have anywhere to leave their children, there's nobody else to care for them, and you have to stay home and care for that individual, whether it's because of school closures or because you have to take care of a child or a parent that has COVID, and there's nobody else available to do that. So if it's a family leave situation, you can get that for up to 10 weeks. And that has a maximum of $200 a day of the person's salary, or 2/3. $200 a day max, or 2/3 of what they normally get paid for up to 10 weeks. So if $200 is the max, right, because it's the lesser of the two. So $200 for 10 weeks, that's quite a bit of money. $200 max per day for 10 weeks. So the total you can get there is $10,000 as a credit. Now, employers have a different way of going about this that is completely different than for the self-employed. If you are self-employed, you're going to take a look at your 2019 Schedule C. Okay, you got to look at your net profit from 2019 Schedule C, which is where you would report your 1099 income or your self-employed income. And you are going to take that number and divide it by 260. Why 260? I wonder if anybody knows. 260 are the working days. If you take 5 days a week for 52 weeks, you get 260 working days out of the year. I know self-employed people don't necessarily only work 5 days a week, but that's the calculation. Okay, so you're going to divide your net profit. Hopefully there is a profit there, because if it's negative, then you're not going to get anything. That number is going to be 0. But you take the net profit divided by 260, and that'll get you your daily rate of pay. Okay, and then from there, you apply the same rules. If that daily rate of pay is above $511 a day, then you can only claim $511 if you were the one that had a positive test result of COVID, okay? And you could not work, you couldn't telework. That's the rule. You're supposed to be at home and not be able to work, not even telework, okay? So what is your daily rate? Is it less than $511 a day? Well, then you take your daily rate. If it's higher than that, then the max you can take is $511 for 2 work weeks or 80 hours. If you had to stay with your kids and you couldn't go out, same thing, you're a self-employed individual, but your kids were out of school, so you had to stay home, or you had a child that got sick with COVID. You had to stay home, so then same thing. You divide that net profit by 260. What is your daily rate? Is it less or more than 200? 200 is a max, but whatever it is, if it's less than that, then 2/3 of that daily rate then would be what you get paid for up to 10 work weeks. And that's basically how it works. Now, the good news is that 2019, okay, so nobody knew about this, so it is what it is for 2019. Maybe you had a loss, maybe it was a profit, you don't know. But they're giving you the option now to look at 2020's profit. A lot of people haven't done taxes yet, as today is the official start of tax season, being February 12th. Yay, congratulations. So if you have a profit and loss already, and you know what you are going to, what your net is that you're going to report on the Schedule C, then you take a look at that number and you use that one and divide it by 260. Basically, whatever you use that number to file, that better be your last draft of your Schedule C, and that's the one that you file for 2020, because you do have to keep it for documentation. But the good news is that you can pick the better of the 2 years. I mean, that's pretty cool, because you may have had a bad year, but you bounce back the next, and then you're able to pick whichever number is higher, and that is definitely to your benefit. The only bad thing about this is that as employers, the employers can actually request this credit throughout the year. Obviously 2020 passed, so they would have to go back and amend the 941s for last year. But for this year, like if they've already had sick leave wages paid to their employers, they can request it on Form 7200 or their 941 in April. But if you're self-employed, unfortunately, you do have to wait. If say it falls in the first quarter of 2021 that you're sick, or that your family is sick, whatever reason you had to stay home, then you have to wait for this period of January through March. If you had that happen in this time period, you have to wait until you do next year's taxes to do that part. But for 2019 or for 2020, you can also claim that on your tax return. So how do you do it on your personal taxes? It doesn't go on Schedule C. You use Form 7202. Instead of 7200 for the employers, it's Form 7202. It is a worksheet, and it is part of your personal tax return. You go to that page, and we may do another video kind of showing you where it goes and how to go about it, but that is the form you use to see how many days. It's going to do the calculation for if you have software. If not, you're going to have to figure it out by hand. You're going to put all your numbers there, do the calculation, and then the result of 7202 is going to transfer on to your 1040 on line 20, and that credit is going to show up there, and it is a refundable credit. So it's going to not only take care of any tax liability that you have, but if the credit is greater than the tax liability, you will get that money in your refund or reduce how much you owe. Okay, so that's a pretty fantastic thing. If you're the type of person that likes to calculate what's the max, if you made $511 a day, how much is that? How much would your Schedule C net profit have to be? It would have to be $132,860. That would give you the $511 daily rate when divided by 260 and all that calculation. So pretty simple. It's a great way to get some money back also on your tax return. So there's a lot of things to keep track of on your personal taxes. If you never got your stimulus payment, that's something also that you claim on your personal taxes. And you can claim your family leave and paid sick leave on your personal taxes. So please, please, please don't overlook this. Talk to your accountant about it and make sure that you cash in on this if you had that need. Now, very important. It sounds very easy, and it is. However, you do have to have documentation. Just as an employer is required to ask from their employees the letter, right, and proof that they were out because they truly merited being out, not just because they wanted to go on a vacation. You have to have for yourself in your records basically a letter to yourself. You are your own employer, so you have to make up a letter, put your name, put the dates that you were out sick, put your positive test result, put as much documentation as you can, because you know the IRS at any point in time can look back at a return and question it, and then you get audited and you need to have backup. You need to have documentation. So absolutely have a letter with your name, with the dates that you were out, with the positive result, and anything else you care to add in there that would help substantiate that claim. And if it's for your family and it wasn't for you, then you would need to have the school, the name of the school that was closed, the name of your children, the ages. And this counts for the family leave, right? If your kids were out, they have to be under 14 years of age. If they're older, if they're 14 or older, then you're gonna have to also have a statement that explains whatever special circumstance existed, because I guess they figure 14-year-olds are old enough to stay home by themselves and you don't need to stay home and get paid for that. So make sure you have all those little tidbits of information at your disposal. Have it with the copy of your tax return for at least 4 years in case this ever comes up in the future. Okay, so if you have any questions, please leave comments down below. We try to get to all of them. If you want to speak to somebody about it, call 407-344-1012 or ask your accountant already that helps you do your taxes every year. Tell them, don't forget to bring it up so that you claim all of this on your tax return, okay? So thank you for sticking around. Once again, we totally appreciate that you are, tuning in. We hope that it's a big tool, a big blessing to you to be able to receive this information. So if you have received some sort of benefit from these videos, please hit the like button. Please subscribe. That way you stay tuned to all of our new videos, which we try to put out as many as we can and keep our community up to date. Thank you so much once again, and have a great rest of your day.